So let's just kick off. We're looking at the euro at the moment. Now the euro's had a nice little run, and if we look on the daily chart, what we can see is that we've got this consolidation pattern that has been running now really for all of this year so far, and we've had price sort of bouncing up and bouncing down, and here we are stuck in a trading range once again between around about this 128 region and, well, up here at 132. Sooner or later price will break out of there, and what we've seen is that down at these lows the majority of traders were short, and up at these highs the majority of traders were long. So they were positioned on the wrong side of the market, and that is so often the case. And by determining that the majority of people are sort of chasing themselves one way, then what it tells us is that, well, if pretty well everyone is long at these highs, where is the fresh money? Where is the fresh money to really push price that much higher? And if we were to look on the markets in that way, then we can suddenly get a completely different perspective. Now, we're all emotional beings, and we get affected by excitement and depression. We all do. We all do, to some extent. I mean, some of us may well be pretty good at masking it. Some of us wear our heart on a sleeve, but we're all affected by it. Even the coolest customer, even James Bond, cool customer that he is, gets himself excited every now and again. And that's what happens when markets go up. When markets go up, and we've got all these green candles sort of moving higher, then that's exactly what's happening. There's excitement. People don't want to miss out. They want to get in there. And that's why so many people will buy at new highs, because of the fear of missing out on a good thing. It's rather like the crowd behaviour that we tend to get when people are trying to grab tickets to a particular event. And consequently, we'll quite often find that on an interesting event, tickets will sell out so quickly. And you can get a bunch of people in the street all going about their business in their own way, and all of a sudden, somebody will look up, and then somebody else might look up, and then everyone starts looking up. If indeed there is somebody waiting to jump off a high tower or whatever, it's beside the point. The fact is that we follow what other people are doing, and it's something which is totally inbuilt within us, and we really just can't stop doing it. So we've got to be aware that that's what we do all the time, and when we find ourselves getting a little bit excited because we've just seen a breakout on the upside or the downside, just take a step back and have a little think about what our emotions are telling us. Well, they're telling us to get excited. And let me tell you this, that the majority of excited traders lose money. They get excited, and they get carried away, and they lose money. So it's probably a good idea to try and remain cool, calm and collected at all times when you're in front of a screen with a mouse button in front of you. Right guys, well, let's just consider one of the most interesting markets that there is at the moment, and that is the Japanese yen. Now what we've actually seen with this is that the dear old Japanese yen has been moving, and it's been moving and getting weaker and weaker and weaker and weaker over a period of time, until price decided that it had got just a little bit too far in front of itself and has then corrected on back. And if we just look at this channel, we could just do a little bit of channel analysis and see that price has actually reached the top end of the channel several times. And whenever it has, price has then corrected on back down. And it corrected on back down, and it's then sort of formed a middle channel and a lower channel, and price has now just broken through with one of these corrective A, B, C moves, and this corrective move may well have run its course. It may well have more to go. But why up there at the high did it stop? Now we could just look at this on technical analysis and say, right, well, it's just got itself a little bit overbought. We could say we've got one of these Fibonacci harmonic patterns, which is 3 drives to a top, and as a result, it was a foregone conclusion that it would correct, and that would be a reasonable assumption to make. And what we want to do then is to short it until such time as it stops going down. Now, we may well have reached that point. We may well have got to the point where it has stopped going down and it's going to bounce on up. But let's just look at this in the context of what it has been doing in relation to the commitment of traders reports. Now, we've mentioned this before, and as you know, it's something that I follow and do like to take a look at. So let's go there right now. Right, I'll just bring this over, and with any luck, you can see that on screen. Perhaps you can just confirm that that is the case. Yeah, you can see this this little chart. Now, this comes out of the CFTC. Brilliant, excellent, and it's published every week, end of every week, and it's good up to the previous Tuesday. So it's a little bit historical. And what we're looking at is this one more or less in the middle there. It's a Japanese yen. Okay, we've got Japanese yen. And we look just down here, and we've got several categories. We've got non-commercial, commercial, and totals. Now, I'm not interested really in the totals, and I'm not really interested in the commercials, because the commercials will be, all sorts of institutions who are pushing things through commercially. What I'm interested in is what the speculators are doing. And the speculators are then these non-commercials. So I want to look at the longs and the shorts. Okay, I want to see what's going on there. Not really interested in the spreads. And I want to look at the number which is underneath there. So we've got that number of shorts. Okay, on the Japanese yen, this is the futures contract of the Japanese yen. And there are 118,000, okay, who are short, but only a minuscule, by comparison, 18,000 or so, 18,500, who are long. So, what we got there is quite clearly we've got the majority, these non-commercial traders, and they are short this market. And indeed, they've been short for quite some little period of time.